Exercise 1-25. We're going to find the matching transaction. So this homework problem is a really good brain exercise. So you might find it difficult at first, but it'll help you learn the accounting equation. So as a manager of a Papa Sean, notice that's not Papa John's, they don't want to get a copyright infringement. The manager of a Papa Sean's restaurant, you must deal with a variety of business transactions. Give an example of a transaction that has each of the following effects on the accounting equation. So A, increase one asset and decrease another asset. So this is a list of the effects of a transaction. And then down here, we're going to do them one by one. So here's A again. So what type of transaction, in other words, what must be going on if we increase one asset, but we decrease an asset? We decrease another asset. Well, it sounds like we must be buying something, probably with cash. So let's see if we got something in here about buying something with cash. How about cash purchase of office supplies? Does that make sense? We increase one asset, we now have office supplies, and decrease another asset, we decrease cash. So that sounds right. We're excellent. Transaction B, we decrease an asset and we decrease equity. So this one's a little more challenging. So we have less assets, but we also have less equity. What kind of a transaction would cause that? Would a draw cause that? You decrease cash maybe, and that would be, you decrease cash because you're going to spend it, the owner is going to spend it on himself or herself, and therefore it's a draw, because remember, draws decrease equity. That's what that sounds like to me. Let's see if we got a draw in here. Owner withdrew cash for business. Let's see, so cash is going down, and then withdrawals decrease equity. So that makes sense. Transaction C, we're decreasing an asset and we're decreasing a liability. So if a liability decreases, that's good. So why would one of our liabilities decrease? Well, we must be paying it off with cash. So let's see if we got something about paid cash on accounts payable. Does that make sense? Is accounts payable a liability? Yes. So if you're paying off this debt, it's going down. And then because you're paying cash, that asset is going down. So that makes sense to me. Transaction D, increase an asset and increase equity. So this is good. So we're getting some type of asset. So if we're getting an asset, what would cause equity to also increase? Now you might say, well, we're buying an asset. Well, if we buy an asset with cash, another asset, cash, would decrease. So that can't be it. You might be saying, well, maybe we bought an asset, but we got a loan for it. No, a loan would increase liabilities, not increase equity. So this sounds like we might have sold something and we got some cash or AR. Let's see here. What do we got? Made a cash sale for services. That makes sense. Cash goes up, that's an asset. And if we sell something, that's a revenue. And what does revenue do to equity? It increases equity. Now, also what could have caused this? Also what could have caused this is we could have sold something on account. So selling something is revenue. So that would increase equity. And selling it on account means instead of getting cash, we would record accounts receivable, which is an asset. So that would make sense, but that was not on the list. And then finally, E, what would increase an asset? That's good. But increase a liability, that's bad. So it sounds like we got something, we might have bought something on account, or we might have got a loan. Let's see what we got here. Here we go. Borrowed money from the bank. Let's see if this makes sense. If you borrow money, cash is going up, and cash is an asset. So an asset is increasing. And if you borrow money, you have a liability. So, yep, that makes sense. And that's it.